Our next guest analyst, let's please bring in Mr. Craig Bolanos. He's the co-founder and wealth advisor at VestGen Wealth Partners in Chicago. Please welcome to the show, Craig.
Hey, Scott. Good morning. A very happy Friday to you. Thank heavens the government shutdown's over. We got a little bit of what seems to be some market hangover with AI enthusiasm being questioned. Don't worry, Scott. It's temporary. And by the way, that Bitcoin thing being adopted in mass by banks and countries all across the globe, so that'll be an interesting story in the year to come as well.
Yeah, it's funny that the government shuts down, the stock market rallies hard, the government reopens up, and everybody's like, oh, here come the clowns. They're going to start spending again. And they start hitting all the stocks. I know that we've got some valuation.
Buy the rumor and sell the news.
Believe me.
All that is. Buy the rumor, sell the news.
It was a bloody day for me yesterday, I'll tell you, and I'm going to lose more money today, but I'm sticking with it because I definitely believe in it, and you're right, this is going to be a short-term thing, and AI is definitely not over. But the perception of maybe stretched valuations combined with a Fed that maybe seems to be a little bit more hawkish than folks thought, that's really kind of turn the tide here in the short term. But you know what? With a shutdown as long as it was, 43 days or whatever, that's going to do a little damage to the economy, and that's going to make that GDP come in. We've seen these equity prices tail off. I think that there's going to be pressure on the Fed to cut on December 10th. I think they're going to still do it, even though all the all the betting markets say that there's just over a 50% chance. What are your thoughts?
They're going to cut. They're absolutely going to cut. I mean, I know what the Fed futures say. I mean, we went from 95% to 64% to 52%. I think they're going to cut. I think the only thing we needed in this economy was 2 rate cuts. We already got those. If we get 3, it'll be an even better Christmas season, right? So give us a 3rd rate cut, because I think when we get these jobs numbers, everyone's going to realize we're pumping out 4.5% unemployment from what used to be 4.3%.
Yep.
And the Fed's clearly abandoned the inflation target. They're going to focus on the other side of the dual mandate, which is jobs.
Yep.
And, Scott, I give you credit. You talked about these bankruptcies. You talked about Chapter 7, Chapter 11, Chapter 13. You've talked about the increase of subprime auto loans. And now I just saw, the data yesterday? A 20% jump year over year in foreclosures on mortgages. It's not the Grim Reaper coming, but the most vulnerable consumer is clearly taking the brunt of all of the hits right now.
Exactly, and that brings to mind what everybody keeps talking about. And I'm not sure all the listeners know, but this K-shaped recovery, where that upper 10, 15, maybe 20% max, those folks are doing well, while the rest of us, 80% or maybe 85%, are struggling because we haven't really benefited from the asset appreciation in, say, homes. If you're renting and you don't have a big 401k, so you didn't see a lot of asset appreciation in your stock portfolio, and all you did was pay 5% more year over year for your groceries, and that compounded to about 25% total. I mean, that doesn't add up to the man on the street doing very well over the last 5 years, and it doesn't look to be getting any better in the short term here either. I hate to say it. I know that Trump wants to get these grocery prices down, but with inflation at 3%, that still means they're higher than they were this time last year by 3%. So there's not a lot of relief there.
No, there's not, and there's not a quick pill. There's not a quick fix to go ahead and get that done. It's an amalgamation of so many different things. I think you can only control what you can control, and control right now. Be fiscally responsible. I think the best thing that happened was getting this government reopened, because I've said on your show a couple of times, if you ran the shutdown into Thanksgiving, you would destroy the psychology of the U.S. consumer going into holiday spending, and that would just be a nail in the coffin. Thank God it ended. I think that gives everybody a reign of hope, and I hope that these pullbacks in these large tech stocks are allowing those who have just avoided that sector. I mean, you say, is there anybody that has? There clearly are. People should have their shopping list, and they should be stepping up and ready to buy. And for everybody else who's building a long-term, durable, diversified portfolio, let these sharp declines act as a reminder that you need to be diversified with purpose. You can't just own the S&P, because one day there will be a day of reckoning. One day there will be a full reset in valuation, and there is just too much asymmetrical risk in the top 10 names to the downside, so people need to be thoughtful and intentional going into 2026.
Yeah, you make some great points there. I think we've got a terribly interesting, next 8 months. The last 2 months of, month and a half of this year, we have 47 days until beginning of next year. as well as the first half of next year, because I think with the Fed and its mandate and the jobs, I think they're going to fight a losing battle there. I think with AI, I really do. But they're going to start with it, and they think that they might be able to make money a little cheaper, and maybe they stave off the real bad stuff for the short term. But I think that's going to spur on inflation. I think that's going to make the bond vigilantes mad. So I'm worried about that 10-year yield getting a little bit running away from us. So we'll see. There is a lot of good news out there. I mean, the earnings are fantastic. That's good. Our GDP, meant to be 4% with the Atlanta Fed, now GDP, but that probably will come in a little bit due to the shutdown. But still, we're doing well when it comes to our growth. The one big beautiful bill is going to kick in even more the first quarter next year. And if we do get the Fed off their keisters here and give us another rate cut, I wasn't really in for one at first, but now that I've seen things kind of melt down around us and with the job situation the way it is, I'm in that camp that they can go ahead and give us one. I wouldn't really complain too much about it. So we'll see. I mean, it's going to be, like I said, an interesting 7.5 months.
No, it's going to be a very interesting, 8 months, I think. The last 2 months of the year, the first 6 is next year. And that's right. The Fed's going to give us what we need. It's not what we want. The reality is the data probably indicates once the data starts flowing again that we need it. And Scott, next week, I think we got to make sure that we're talking about these underpinnings that aren't getting as many headlines. There is a massive Bitcoin build out going out in other countries. There are all these industry advances with crypto between the big banks, the brokerage announcements for crypto roadmaps coming across the board. And listen, you think about all the ETFs that are getting spurned here that are about to be launched. I mean, this is a story of momentum. So take a look at that favorite cryptocurrency that people don't want to touch for whatever reason. It went to 10,000. Everyone said it wouldn't. It went to 100,000. Everyone said it wouldn't. I don't know. People say it can never go to 1 million. What if it does? That's not a license for anybody to purchase, but it is a curiosity. I tell people, be curious, as Ted Lasso would say, and learn about blockchain, learn about digital currency, because there's a tectonic shift underneath our feet, and people deserve, can, and should learn more.
Great stuff. I'll end it on that one. Thank you very much, Craig Bolanos. He's co-founder and wealth advisor at VestGen Wealth Partners up in Chicago. We're going to go away. Remember, give us a call, send us a text, whatever you'd like to do. We're going to pay some bills, and we're going to come back and talk more right after this.
The battle lines are drawn live on RFD TV. It's me.